All right, I guess we can get started. Craig, are you ready?
I'm good to go, John.
Perfect. All right, I want to thank everyone for attending this as well. I want to thank Craig too as well for hosting and presenting. My eyes, with the year starting to come to a close, I think it's important to see what we can learn about the 5 steps to sales compliance here. I am John with IQ. I'm sure everyone here knows who I am. We have Craig Brown from Avalara that's going to be presenting today, who is the tax expert. And let's just get right into it. So Craig, I will turn this over to you, and feel free to start.
Perfect. Thanks so much, John. And thank you everyone for taking time out of your day to come with this. Today, I think it's gonna be exciting and very informative. I want to keep it real high level around sales tax compliance, what you should be doing, and then how some tips on how to streamline that process for you. A couple things I did want to address. I am recording this webinar, so if you have colleagues that weren't able to make it, or if you wanted to just have this recording on for reference, please reach out to John or myself. We're more than happy to share it with you. And additionally, post this webinar, I'm going to open it up for Q&A. So any questions that you might have, please feel free to put them in the chat as we go across it, and we'll address them at the end. And with that being said, let's jump right into it. Quick overview of the agenda today. First, we're going to cover, why sales tax matters. Then we're going to take a look into some sales tax basics, including the where, the who, and the what. Then cover a little bit about Nexus and when you need to collect. From there, next, we'll go into what we have defined as the 5 steps to managing sales tax compliance and actions you and your organizations can take. And then finally, we'll discuss how you can streamline your process with your sales tax compliance and automate your internal process with Avalara. So first up, let's review, why sales tax even matters. First and foremost, for every state that has sales tax, they rely on state and local tax for revenue. As you can see, the statistic on the right hand shows nearly 24% of state and local tax revenue comes through the sales tax collection, which is second only to property taxes. This is a huge part of the state's revenue sources. And in fact, tax authorities are highly dependent on the revenue across both in and out of the US and Canada. So this is a huge aspect of income for these states. And the states are pretty forthcoming, saying like, hey, we're going to be proactive and we're going to be doing more audits because it's such a huge revenue source for them, especially since I don't know if you're aware of it, but the 2018 law change where economic nexus. So if you're doing business in the states, even if you don't have a physical presence there, you could be triggering nexus, which would require you to start collecting in sales tax and remitting it to the proper jurisdiction. But that's something we'll take a deeper dive into. I just wanted to paint a picture that sales tax is a huge part of the state's revenue, so they are definitely investing a lot of resources to make sure that they're getting paid. Now that we've covered, why sales tax is important, let's discuss a few sales tax basics. Like I said earlier, the where, the who, and the what. These are the foundations of sales tax. And to begin, simply put, it's all about the where, the who, and the what. And so when thinking about sales tax and being audit ready and compliant, it's important to know what's taxable. So first, you have to think about the where. Where are you selling your products and services? Do you even have nexus in that state? Each state has a varying stance on what's taxable versus what's not. So when selling a tangible good, it's pretty much always going to be taxable everywhere. But things like services, labor, maintenance, software, they could have a varying taxability state by state. So outside of the taxability, you also have to understand the who. So who you're selling to. A product or service may be taxable, but is your customer exempt from sales tax? And if they are, do you have their exemption certificate as proof to why you're not collecting or charging them sales tax? So we hear a lot of folks, aren't really too worried about sales tax because the majority of their customers are tax exempt. So you might not have like a tax problem, but you might have more of an exemption certificate problem. So no matter the level of exempt customers, it's important to ensure that you're collecting exemption certificates to have proof that they're exempt, whether they're a reseller or a government entity or whatever their reason for exemption is. And then lastly, it's the what. What are you selling? Is it a good? Is it a service? Is it software? And are there other line items that may show up on this order invoice It's important to understand the what to ensure that you're taxing these products and services appropriately in your home states, but also in other states as you expand your Nexus footprint. Ultimately, that means if you're growing outside of your home state, if you're selling into other avenues outside of the states that you're currently doing business in. And again, every state has a different stance on what these various items, which can make it extremely difficult to maintain compliance. Next, let's shift gears and focus on the 5 steps to managing sales tax compliance. This is where we're going to spend most of our time together today, is on this, is just understanding the 5 steps and then obviously how to manage those. The first step in managing sales tax compliance is understanding your Nexus footprint, which again is where you must collect and remit sales tax. So this is, like I said earlier, it's definitely grown, that understanding of trying to figure out, hey, where should I be registered? Because there's so many different avenues in which you need to start collecting and remitting sales tax. And I have a slide or a couple slides down the road where we'll take a deeper dive into the different forms of Nexus, but I just wanted to highlight it at real high level now of, kind of the backbone of this is just understanding where you need to get registered. And then once you understand that, you have to, once you've established or understand where you've established Nexus, you need to get registered. And each state's registration forms can be a bit different. Generally, states want you to get registered within 30 to 60 days of exceeding economic Nexus thresholds. And then going on to step 3 is, upon getting registered, you now have the requirement to begin collecting taxes. And trying to calculate the correct amount of taxes can be difficult. And that's another thing we're going to address in this webinar, is the complexity behind calculating sales tax with all the varying jurisdictions and varying products that you might sell. And next, if you're making any sales to exempt entities like resellers, distributors, or manufacturers, you need to keep track of your exemption certificates and ensure that they're valid and current. In some cases, these exemption certificates are expiring on an annual basis. And then validating these with each state or Department of Revenue are things that you have to do to check the authenticity of this exemption certificate. And then lastly, you have to file the tax returns and in these states and remit the sales tax liability to the taxing authority in a timely manner. Typically, the state will always determine your filing frequency, but it can be monthly, quarterly, semi-annual, or even annually. And I understand while these slides make these steps look simple, we all know there's a lot that has to happen in each step to ensure compliance is maintained. And I know myself, I remember a few years ago when talking about how complex sales tax is, we used a picture of an iceberg. We all know it's there. We can see the tip of the iceberg. We know that, sales tax is there. But underneath the water, there's just so much more to worry about, which include law changes, exemption certificates, and having to get registered in different states, which of course they all have different registration forms, filing sales tax returns, which again, every state has different returns, filings, and frequencies, and then understanding the taxability. Something we just touched on a bit ago, like taxability by products varies. Depending on what you're selling, it could be taxable in one state, but not taxable in another state. So having that understand is obviously very cumbersome, and it's something that you have to keep in mind when you are doing business outside of your home states. Now what I'll do with those 5 steps is just take a deeper dive into each one of them, just to paint a better picture on the 5 steps and maybe what you're experiencing today. And step 1, like we said, is just knowing where your business must collect. And it's important to take a look at your business activities and how they can trigger a Nexus obligation. Physical Nexus is definitely the most obvious and easy to identify. This could be, where you have employees, where your employees travel, such as sales reps going to other states, going to trade shows, where you store your inventory, where you have physical brick and mortar locations. Those are all forms of physical Nexus. But now you also need to consider where you're selling to outside of your current home states. You have to think about, like, are you hitting revenue thresholds, or are you selling over transactional amounts? So for all of you that aren't familiar with economic Nexus, what that is it's your obligation to get registered, start collecting and remitting sales tax once you've hit a certain volume or transactional volume in a certain state. The rule of thumb is once you hit $100,000 in revenue or 200 transactions in a state, that is a pretty clear sign that you should get registered in the state. Like I said earlier, all these states are varying, but the rule of thumb is we use 100,000 in revenue or 200 transactions. Those would be qualifiers for you to get registered for Nexus in that state. But on top of that, you also have to consider new sales channels or your go-to-market strategies, and you have to confirm how that can impact your nexus. Next slide, I wanted to take a look at the various forms of nexus. We talked about the physical nexus. That's just having that physical footprint, like whether it's a warehouse, whether it's inventory or sales reps. We also hit the economic nexus. So that's just selling thresholds, transactions that are going into states outside of your home states. Other forms are like click-through nexus. This is when an in-state business receives a commission for referring a certain amount of sales to an out-of-state seller through like a website link. Affiliate nexus, that is basically when an out-of-state business has an affiliate located within a state. And then marketplace nexus. This is something that a lot of businesses are taking advantage of. It's when you use a marketplace like Amazon or eBay or Walmart, and they are the ones handling your sales tax. Like they're collecting and they're remitting on your behalf. But you doing that business in those states is also triggering nexus. So your activity outside of your marketplace seller would still have to be tracked and formed of a nexus format. Jumping into step 2 is once we figured out where we need to collect, the next step is registering to collect. So each state's registration forms can be a bit different. Generally, states want you to get registered within 30 to 60 days of exceeding economic nexus. And the list on the right shows, typical items and information needed to get registered. Like what's your type of business? What's the business name? It's pretty straightforward questions. The difficult part behind getting registered is understanding where you have to go to get registered. Is it the Department of Revenue? Is it the state sales licensing page? And it's even that getting there, there's not a clear-cut place of going to get it done. So it's just another step or another thing that you have to know or have to be familiar with. So the people that have gone through that, they understand like, hey, it is complex. It's very difficult to try to find the correct Department of Revenue to get registered for sales tax. But of course, once you do get registered, at that point, it's time to start calculating the right rate. And in the US, you think of the states as, hey, we have 50 states, so there's probably 50 different taxing jurisdictions. But unfortunately, there's many more than that. There's over 13,000 different taxing jurisdictions in the US because not only do the state charge sales tax, but in some states, you have the cities and you have parishes that charge, or counties that charge sales tax on top of the state. So there's so many different avenues in which you can get which sales tax is derived from. And the crazy thing is we have 46 states, including DC, that charge sales tax. So that's where the 13,000 different taxing jurisdictions come into. And each jurisdiction has their own rate and their own bearing product taxability rules. I like to use this image on the right. What it is, well, let me rewind a little bit here. Typically, most businesses or most individuals think of sales tax as defined by the zip code. Unfortunately, a zip code is more geared for mail. Sales tax has its own little jurisdictional assignment and proper location for tax determination. And here's an example of it right here. So there's this Commerce City, Colorado of 80022. This is the zip code for two varying taxability rates. So I've orange rectangle shows two different houses, one's in purple, one's in green. These have, in reality, two different taxing rates, but they're in the same zip code. So I just wanted to paint a picture for you. So these clients, or these neighbors bought the exact same computer, but they had a difference in taxability of almost twice as much, just based on where they're at. So if you're using the zip codes to charge sales tax, you're going to do one of two things. You're either going to overcharge a client sales tax and possibly cause, bad customer experience, or you're going to undercharge them sales tax. And in that case, you'll be remitting lower amount to the city or state, and then you'll have more due at that time, which unfortunately you have two options. You go back to the client and say, hey, I didn't charge you enough, or it's out of your business pocket. Jumping to step 4 is like we said earlier, is tracking and managing exempt sales. And business can be exempt from paying sales tax for a variety of reasons, which could be for a specific instance or purchase, or you could be selling to an exempt organization such as a government or a nonprofit, or the item is just being sold, is intended for resale. So ultimately, if you're not charging tax on a sale, and you typically would, you'll need to collect an exemption certificate. And like the rest of the compliance discussed, there's not a one exemption form for all. Exemption forms all look a little different as you go state by state. So it's important that you're receiving the appropriate form, that it's filled out correctly, and that the information is accurate. If you're missing forms or if they're expired, like we talked about earlier, some of these are expiring on an annual basis or every 3 years. Some of them don't expire at all. But some folks, they view each certificate as a currency because a missing form could cost hundreds or thousands of dollars in an audit. Because if you don't have the proper exemption certificate on file under audit, then you're going to be liable for the sales tax that you didn't collect. Jumping to step 5. So this is when to file. So when to remit to sales tax for the proper authority. And so once the sales tax is collected, those funds need to be remitted back to the jurisdiction. And like mentioned earlier, sales tax is a pass-through tax. So once you collect it, you send it on to the respective state or jurisdiction. There's also several nuances when it comes to sales tax remittance that include paper versus online remittance, varying filing frequencies, filing in local jurisdictions in places, like I said earlier, like Colorado and Louisiana. And with those varying dates, it's important to ensure that you're filing and remitting your sales tax returns on time. Each state also has its own respective form, which can make the process just that much different or just that much more difficult. So up until now, I know we chatted about the 5 steps of managing sales tax compliance, and each state has a different nexus laws, different registration forms, varying sales tax rates, rules, taxability. So it's definitely can be a mess, but fortunately, Avalara has solutions that can help fit with these five steps of managing sales tax compliance. And so that's what we'll jump into next. And what I've done is matched up a solution or Avalara solution to each one of the 5 steps here. And I'll go over it with the real high level where we can help or where we can fill some of those voids. Step 1 was trying to figure out, hey, where you need to be registered, where do you need to start collecting sales tax? So if you have questions around where you should be registered, that's something that we can help out with, what we call as a sales tax risk assessment, to help you understand your Nexus footprint, provide insights on where you should be registered, and then recommend the path forward. Now, this is something I definitely wanted to point out to you guys. We are actually running a promotion through the end of the year, where we're offering our free sales tax risk assessment, which is retailing at $4,500, but through the end of the year, we're offering it for free. So I ask any and all of you that are in a situation where you don't feel too confident that you have a good understanding of where your exposure is, take advantage of this. This is just something, the worst thing you can take out of it. It's an informative piece that's going to get you up to date on where your Nexus footprint is. And that's something I'll go over with you a little later at the end of the slide, how it works and what we can do to get it in front of you. But after understanding of where you get registered, second part is getting registered. So once you've identified these states, Avalara can help you get registered. So instead of filling out multiple forms with the same information, we could streamline the process and get you registered in various states and jurisdictions. What it looks like on our end is you just fill out one questionnaire. It's a universal questionnaire, and then we use that questionnaire to get you registered in any state that you want. So at this point, you would just be checking boxes. Hey, I need to get registered in Florida, Missouri, and New York. And what we'll do is we take the questionnaire that you've already filled out and we get you registered in those states for you. Step 3 is calculating. So if we're trying to figure out and calculate the right rate, Avalara has an integration directly into IQ Reseller to calculate the sales tax rate in real time. So you no longer have to worry about rates, rules, varying taxability, setting up new tax codes and rates in new states. It's all done through the integration with Avalara. And then step 4, and for those of you with exempt sales, we can help track, monitor, and report your exemption certificates and help you to be more proactive through sending requests to solicit new and updated forms from your customers. And this is great for your current Nexus states, and it makes it easy to grow into new states while capturing those new exemptions. So it's not just a repository that holds exemptions, but it also comes with our professional services that are monitoring the exemptions. We're validating it on the spot so that you can have a smooth transaction with your clients. And there's not that hiccup of, hey, is this exemption filled out correctly, or is it validated with the state? So it's one of those things where we're going to automate the process, and it's going to be a much smoother client transaction with your behalf as well. Jumping to step 5, lastly, like I said, Avalara can help automate the filing and remittance process. We'll file your sales tax returns on your behalf and then pay the states from an account that you fund, similar to a funding payroll. So this gets you away from the monthly process of filling out multiple forms and paying various jurisdictions. Also wanted to address here is a bigger picture. Here's the AvaTax compliance suite. Avalara helps customers in two main ways. I like to define these as automating a process through software, and the other is just helping you with your tax profile and tax strategy. So we talked about the majority of this on the previous slide, but the automation includes the IQ reseller Avalara integration to determine the appropriate sales tax, the exemption certificate, and then the automated returns and filing process. But we can also help you understand your Nexus footprint. That's another thing we talked about, is that free risk assessment that we're doing through the end of the year. But from there, we help you get registered in various states. And then lastly, we have the ability to help you through tax research model. And this can help you provide you with tax answers to various questions and notifications and audit defense around laws and citations, and then back up those tax answers. So I like to explain it as it's a glorified Google for tax research. So we have the automation tools, and then we have everything that backs it up around our solution, so our cloud-based solution. And then why automate sales tax management? So you might be thinking, why should you automate? And if you outsource payroll, the justification is essentially the same. When it comes to sales tax automation, they're both confusing, hard to keep up with, and a lot of risk if you do it wrong. So in sales tax, accuracy, of course, matters. And we saw earlier, there's a risk in over or under collecting and trying to figure out sales tax rates in the 13,000 plus jurisdictions. It can be very time consuming. And from an efficiency perspective, sales tax is not revenue generating. So that's usually the downfall behind it. It doesn't put any more money in your pocket, but it's a compliance thing. Automation could help reduce costs, free up time, and have your staff focus back on more important tasks. But you can also increase customer satisfaction when the right rate is charged. So around that example earlier, around the Colorado, is the customer experience. Obviously, most of our customers don't know what the right rate is that they should be charged, but it is. Some of them do know that. So it's about being compliant, but it's also about being right on the customer's end as well, too. And lastly, as we talked before, you can have your staff focus on more revenue generating activities. So all in all, those are all reasons why you would want to automate the sales tax compliance. And here, like I said, I wanted to talk about it again, was our risk assessment. So this is free through the end of the year. And like I said, please reach out to John and myself about this risk assessment. There's no obligation. Ultimately, all it is it's our services to keep you up to date with where your Nexus footprint is. So I say, please take advantage of it. Like I said, through the end of the year, reach out to John and myself. We'll get you guys set up. And with that being said, I wanted to thank everyone for their time. I know I cruised through that. I wanted to make sure I got to the end so we can do some open Q&A here, because I wanted to address any questions that we can. So with that being said, please take down my contact information if you need to take questions offline, or if you have more specifics that you need to be addressed, please do. Give me an email, or shoot me an email, or give me a call. But let's open the door, John, to any questions.
Greg, thanks so much for that. Great job with that. And I do recommend everyone on this call to take use of that offer that they have. I mean, you may think that you have your taxes handled, but it's a good free assessment. It's good to put a second set of eyes on it. And it is done by Avalara, who are experts within the tax compliance world.
100%. Like you said, John, even if you believe that you have things in line, there's no downside to this. It's something that's just going to be like an extra set of eyes on it, like John said. It's going to give you that confirmation that, yep, I'm doing everything right. And then it's a reference tool. Like, hey, we know we did this too. We're doing our pre-audit services internally, just making sure that we're doing everything at the right way.
So we'll give it a minute here for some questions. If you do have questions, put it in the Q&A. It does appear that the chat is disabled right now.
Oh, I'm sorry.
So, like Craig said too before, we will send this recording out that you can send it to anyone that did miss out or just could not partake. Or if you just want a copy of this to look back on for sure, we will send a recording this out shortly after.
John, did you say it was disabled on your end for the chat?
The chat looks to be disabled, but the Q&A is open.
Okay. I just opened up the chat as well. Give it a couple minutes. If you guys have questions, please feel free. Alex has a question. He says, will sales proposals and IQ calculate the sales tax?
Yes, they do.
Yep. So the integration, how it works is, and this is something we can obviously address offline, or we can take a deep dive here, but how it works is the integration, you're going to continue to complete invoices or proposals in IQ reseller. And what's going to happen is it's going to ping Avalara in real time. It's going to send an API call over to us. And based on the who, the where, and the what, we're going to send back the tax rate liability for those transactions at the line level. So this is something you still continue to operate in IQ. It's just you're using Avalara as an add-on. It's a back-end integration that you don't have to go into after implementation. It's just an automation tool that'll calculate that for you.
Yeah, the beauty of it too as well is that you're no longer responsible to set up your own taxes and to make sure that it's done. The beauty of the integration is that Avalara here is taking the sweat off your back to make sure that you are always compliant.
Correct. You don't have to do the manual work of uploading tax rate tables. It's a cloud solution that we offer. So all updates, upgrades, law changes, they're happening in the cloud live, so that you can have a smooth transition and not worry about, hey, going through these updates or making these changes. On the address for tax validation, can it handle the differences in addresses like north versus north? Yes. So we have, like you already, sounds like, yeah, the address validation comes with the AvaTax, and it distinguishes. So it'll do a address check on all these, and it'll be able to distinguish the difference. And it gives you recommended alternatives. Did I answer that right, John? I didn't articulate that well, but
No.
that makes sense.
Yes, you did. When you are signing up, there is a address validation feature within our particular client vendor codes for you to validate that address.
Perfect. So Jeff has a question. So in New York State, if we are buying something from a vendor and sending it to a customer in New York, we can use the customer's New York tax exempt certificate if they have one to avoid paying sales tax on a drop ship. Are there any other states that work the same way? In New York, if you're buying something from a vendor and sending it to a customer in New York, we can use that customer's New York tax exempt drop ship. If I'm understanding the question correct, so you were, if you are buying something from a vendor, sending it to a customer just as a drop shipper, yeah, you would just be using the end user's exemption certificate, but you would have to supply your vendor either your reseller certificate, because they wouldn't be able to use, and that's my knowledge, use the exemption certificate that you're using for your client. We are located in Minnesota, but do not have drop ships. Yeah, Jeff, let's take this offline. My knowledge, you wouldn't be able to use your client's exemption certificate for your vendor. You would unfortunately have to have your own reseller certificate. It sounds like as you're reselling the product, but let's take that offline. I'll shoot you an email regarding the dropship and how it works. Any other questions? All right, I think that's it. Jeff, I will shoot you an email with our drop shipping requirements and what that looks like for exemption collection, and send that your way. And if there's any additional questions, feel free to, obviously, I'll give you a link to my calendar and we can schedule something.
Again, thank you, Craig. Thank you everyone for attending as well. I always love doing these as well. Look for more of them to come. And again, thank you.
Perfect. Thanks, everyone. Take care and have a great day.